Good morning, everybody. Today is Tuesday, September 10th, 2024. You're in the live trading room for Tim the Trader. Good morning, everybody. I'm Tim. Glad you're all here. Hope you had a good evening yesterday. Fall weather's just beginning to kind of sneak itself around here in Atlanta, so beautiful days. Here's yesterday's charts. We had that mild swing high that happened, and then that massive sell-off that we had yesterday. Oh, let me mute a couple of people here real quick. And then a big sell-off. We had three positive trades yesterday. It was just up 29. Should have actually been up a lot more than that had we taken more of this sell-off yesterday. But it is what it is. But then look what happened. A massive swing high that happened after that, and then another sell-off. So great day yesterday for long-term trades. I was busy in the afternoon and could not trade, or I absolutely would have traded these trends. Beautiful trends yesterday. Triple Q closed right at the supply zone at 454.73, and it looks like we have a gap play this morning. Let me mute.
We do indeed.
We do indeed have a gap play, and that gap will be triggered and filled at, well, let's go back and take a look. Can't read my own writing. 455.56. Oh, hold on. 455.46. 455.46 will be the gap trigger and fill. So we'll keep our eyes open on that. Hopefully that will stay the same. We are trading tomorrow's expiration, September 11th. We are me. Keith will tell you what his is in a minute here. We have 898,000 in on pre-market volume. A little low, but that's okay. We will be trading starting at the money, which is currently the 456 on the call side, the 457 on the put side. Now I can throw it over to Mr. Keith. Good morning, Keith.
Good morning. Good morning, everybody. Yeah, I would have liked to taken more advantage yesterday also, but again, I was away from my computer most of the afternoon, so wasn't able to do that. But still had two trades that were positive, so that's good. Yesterday, up 33 cents. This morning, we have one of the Fed members, Barr, is speaking at 10 o'clock, so that could be a pop. We also have a 3-year bond auction at 1 o'clock today. And for those of you who have been in a hole somewhere, have the presidential debate this evening, which could, who knows what it's going to do. The big reports, though, are going to be tomorrow morning before the market opens at 8:30, the Consumer Price Index reports. And on Thursday, same time, the Producer Price Index reports. And certainly the Fed will be looking at that for making the rate decisions next week. But everybody's anticipated there will be some sort of rate cut next week. And that's about, I'll be trading this Friday's the expiration, the 13th.
Okay, very good. Thank you, sir, for the report. I'm going to mute some folks out here. We got about 30 seconds. There it is, 30 seconds before we start. Make sure you have 20 cents between each of your hash marks, or if not, make sure it's consistent from day to day. That's what's really important, is the consistency. There we go. Make sure that's there. We've got 10 seconds. Stand by, everybody. Here we go in 5, 4, 3, 2, 1. Bing, 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 bing. We're in. We are in. We are in. All right. Let's see what our broader markets are looking like right now. So Dow is up 65. NAS hasn't reported yet. S&P is up by 20. NAS may be up. Do a refresh here. NAS is up by 65. So we've got a positive market to start with, not massively positive, but positive nevertheless. And as always, we're looking for that breakout in the first couple of minutes, something we can trade into.
Hey, Tim,
Yes.
I didn't understand that 20-cent thing.
Oh, okay. See on, here, I'll show you here real quick. Let me get my vanishing. Right here next to each chart, you want to have this set for 20 cents between each of these hash marks. Okay. And oh, Efren, I'm sorry, you're trading on something else, so it doesn't matter for you.
Yeah, I'm doing the Tasty trade.
Yep, it won't matter for you.
Okay.
And we're getting quite a push up here, so I'm going directly over to the 456 on the call side. And we'll just keep an eye on this, see if this is going to continue up. I'm not convinced. Okay. Getting a nice push up here. So I'm going to move to the 457 on the call side. 457. I'm going to go ahead and enter this. And it went right by me. Let me cancel this real quick. I'm going to go back to the 457 on the call side. I'm going to try to enter this again. There we go. And got in at 380.
Yep.
And getting some reversal. Of course, I'm going to stay in this. And we're getting some reversal here. Let Mr. Bryce in. Gary in. We say 455.46. And it would, on the gap play, it would be a put. Well, I managed to pick the very top of that perfectly. So market maker early, getting rid of some positions, dipping down, filling the warehouse. Heading toward VWAP. Got a cross on our MACD on both our MACDs. Well, our 5-minute MACD crossed way earlier. I can get my MACD back up here. All right, let's go over to the put side. I'm going to go to the 457 on the put side. See if this gets through VWAP. All right, I'm going to go ahead and enter this.
Tim, did you enter 456 put?
457. 457 put, Ashim. But if you're not in it, I wouldn't get in it right now.
Thank you.
All right, kind of back up to VWAP, starting to maybe drop again. Oh, I got in at 388 on the put. Playing the gap fill.
But we haven't gotten down to the gap yet.
355, you're right. We're not back, not down there quite yet. But we're getting there. All right, we're continuing to sell off. Up to 404 on that put.
Went down and kissed that gap and went back up.
Mm-hmm.
Hey, are you still holding on the 457 call?
Yes, still have that. All right, let's take profit on this put. All right, 388 to 410. Getting a bounce here. We can go ahead and put a supply zone in.
$464 call.
back up to VWAP, see if it can break through. Let's go. Extra day. And let's edit this.
May get a demand zone if it
Now,
would continue up.
HSV 60. And let's turn the price level red. I'm going to go ahead and put in a demand zone while we are down here. Wow. Got a full house today. This is great. And let's go ahead and give this an extra day. As usual, struggling to get through VWAP, but we've got two zones in, our demand zone and our supply zone. Our demand zone is our green zone, is our green bar line, and our supply zone, which is our red one. Now, prices tried to break through VWAP several times here, can't quite get through. So market maker may take it the other direction. Okay, going back to the 456 on the put side, 456 on the put side. Just stand by on that. Remember, it's rare that we break through and keep going the very first time that we are retesting a zone. It's rare price will break through and continue down. Long wick showing a lot of upward pressure on that last minute. We're just kind of stuck between VWAP and the demand zone right now.
Dow's down 21, NASDAQ's up 55, and S&P's up 17.5.
And we've got 3,100,000 in on the underlying volume. The underlying asset, of course, is QQQ, the ETF.
And it's not unusual the week of the CPI and PPI that it's a little slow on Monday and Tuesday. We had nice volume yesterday.
We did. All right, getting a fairly good push-up going there. Let's see if this stays or if this is just a crazy Ivan. We've got mixed markets, which means price can be a little schizophrenic this morning. Want to welcome some new members who are coming in, and I want to welcome some folks who are visiting us today. And I will give you a tour of what we're doing here in a little bit. Price staying fairly close to VWAP. Getting some push up now. Let's continue on up.
What strike did you have on your call?
That call is the 457.
Okay, thank you.
And if we keep going in this call direction, I may double down on it, which will essentially bring my break-even point down by half.
Gonna get through that supply zone on the first time.
Let's see. Let's trying.
I think it can. I think it can. I think it can.
Oh, we got COVID booster shots yesterday, Melissa and I, and man, my arm is sore.
It's not your mouse hand, is it?
No, it's the other one. I did that intentionally.
I'm a fan of the old Andy Griffith show, and I watched one with the Barbara Eden was the visiting manicurist.
Uh-huh.
Or Andy said, "Barney, get your manicure." He goes, "What?" So he finally does, and he says, "Be careful of this one. This is my trigger finger. I'm useless without it. So got to keep your mouse finger."
Yeah. As far as I know, that police department only had one bullet.
Yeah.
So pushing back through VWAP or trying to. All right, going to head over to the put side again to the 456 on the put side. It has broken through, but just extended price about the same place it has hit before. So we know we've got some support level just below the demand zone at about 455.42. So while we wait for this to do something, for those who are joining us today, we use a 3-chart system here. Well, actually, there's 5 charts. We have longer term charts on our third monitor here that you don't see. But basically, starting in the upper left, we have a regular 1-minute chart here with a volume subchart. In fact, I'm going to adjust that up a little bit. And below that, we have a 5-minute chart. This is what we do our zone system on, is the 5-minute chart. To the right of that, we have a 1-minute Heikenausi view chart. We like the Heikenausi view. It averages price over 2 candles and helps us to see trends more clearly because it takes out the second-to-second price jitteriness that we get on the regular 1-minute. And below that, as below the 5-minute chart, we have a custom MACD, which just helps us what direction, whether we're in a call bias or a put bias, and tells us other things as well. But that's one of our prime indicators. We use the MACD as a prime indicator. It is a custom MACD that is timed to QQQ and SPY, to the movement of QQQ and SPY.
Tim, I got in a call there.
Oh, okay.
The 456 on Friday's expiration call.
Okay. Well, I would love to see that price just jump way up. And then in the upper right, we have our active trader for getting in and out of trades. That's TOS's form of a dome. And like I said, on the third screen, I have a 15-minute chart and a 30-minute chart as well to get a sense of the longer term trends. Yes, very much, Gary. Gary asked very astutely, is bringing the break-even point down sort of like a dollar cost averaging? Yes, it is. Great questions, Gary. Look forward to talking to you tomorrow. I believe we have a one-on-one session.
Yeah, he's had some very good questions this last week and this week. There we go. Get above that supply zone.
Breakthrough. There we go. Hey, Dexter. Dexter, the dog, is with us today.
And I got Natty the cat with me today.
All right, going over to the 456 on the call side. 456 on the call side. Yeah, that's moving up nicely all on its own. I'm going to move to the 457. 457 on the call side. Don't like that long topside wick, though, on the current minute. Break it through. Break it through.
Now, to be clear, Tim, breakthrough on the top side.
Yes. Yes. Let's be real clear on that.
Hopefully taking out some stops and going to move back up.
Mhm.
There we go.
So I'm hoping this is a little trick that the market maker does. Keith just alluded to it. Bring price down, take out stops that are accumulating, and then continue pushing up. We'll see here in a minute if that's what's going on.
Come on, you turkey, get back up there.
Yeah, really.
Arr. Hmm.
So we descended all the way back down to VWAP. See if we get a bounce off of VWAP, as we often do. Gary asked, you rarely mention stops, do you, or don't you use them? In the first half hour, no. After that, yes.
We've got a minute to the pop.
Oh, wow, it's already there. Just crossed on our 1 minute MACD. Here we go.
Here's the pop.
See which way we're going to go here.
Come on, get on up there. Not a lot of volume on that first minute of the pop.
No.
There we go. Get on up. Get on up there.
So usually after 10, we start establishing trends or directions that will last a while. on up. Come on up. So slow climbing out of this drop. Not a lot of volume on the pop. Really
No,
was more of a fizzle this time.
yeah.
Let's see how badly the market maker wants to push up price. So far I've got two trades. One still open, of course. The other one was a 22-cent gainer. There we go.
Come on, get on up there. You know you can do it.
So Cliff asks, first time I've heard about not using stops in the first half hour, please explain. Because there is so much volatility in the really the first hour, Cliff, of the market, that even if you get into a trade that turns as ours have, there's an 85% chance that it's going to come back just based off the sheer volatility that happens in that first hour. We have found that a 30-cent stop gets hit a lot in that first half hour, and we're cheating ourselves out of winning trades. Now, I'm not saying that, you shouldn't have some form of a stop. I mean, you need to pick a point where you're just not willing to stay in that trade any longer. For me, it's 100. But I'm also looking at the longer terms to kind of get an idea of which way we're moving in the market. And the longer term, the 15-minute and the 30-minute are showing a slight bias toward the call side, continuing slight bias toward the call side, although we do have pretty long wicks on either side. You are welcome, sir.
Oh, come on, you turkey. Yeah, just not a whole lot of volume, is there, Tim?
No.
Up to 5.1 million underlying, which isn't very much. But even around the pop, you normally get some higher volume at that pop, and we just didn't get any today.
No, really wasn't much. So the market maker tried here for about 5 minutes to push price up, just basically ran out of traders willing to trade any higher than that. So price will reverse. Now we're back down at VWAP. Let's see what happens here. Remember, the market maker is looking for support on one direction or the other, trying to get retail traders and other market makers to support that direction. Right now, we're not getting any direction at all. Move up a little bit, we move down a little bit, but overall, we don't have just a real clear overall direction. Like I said, we do have a slight bias toward the call side on our longer term charts.
There we go.
Now, see, market maker may have dipped down to take out stops near VWAP just to add more positions to sell out and start moving up.
I just, did I fill on both of them? I filled out for, give me a second, I'll tell you how much here. Yeah, so on my one account, I got 22 cents. And the other account, I got, what I get here? $0.37 on the other one.
Nice.
Sure, now it pops up. I actually tried to cancel that order, but it still hasn't jumped up.
Wouldn't do it, huh?
No, it didn't do it.
Now, hopefully this is the beginning of a longer term call trend that we've got here. And I don't need a whole lot more. If we're in a good, strong trend, I'll of course hold on to this trade, this call trade. But that last minute, 10:08, you can look at that. Look at the volume bar, well above 100,000. That's the market maker trying to get something going, trying to get a direction going. Heading back toward the supply zone, clearly broke through. Wasn't the first time. It's like 1, 2, 3, 4 times or more.
Yeah. Had a couple of huge short-term moves this morning.
Mm-hmm. This is, I think, a different market maker that we've got controlling things today, like short-term dips and short-term swing highs,
Yeah,
not taking on a whole lot of risk, doing it in a very short time frame.
yeah. He may be bipolar too or something too. Didn't take his meds this morning. anyway, yeah, it's tough for us to trade something like that on those just quick moves and then reverses. It just very difficult.
Yeah, because we love breakouts, and our MACD and our zone system help us to see breakouts or give us good entry points on breakouts.
And it jumped down, clear down to the demand zone and then jump back up. So now we tend to wait until it's going to either it crosses the demand zone or it bounces off of it. So it doesn't give us a lot of opportunity yet.
Mm-mm. But one of the reasons we draw our zones is because price tends to come back to these zones over and over again and either bounce off or break through. You can see it's happened, well, a number of times since we established the demand zone.
And speaking of which, we can move the supply zone up.
We sure can. That up
Make the
to,
last one an intermediate zone.
oops, let's do this. Let's activate. Ah, dang it.
And it broke, and we've filled the gap too.
Okay.
I'm going to try to get into that put. Fill.
All right.
Whoops. Did it fill?
Going over to the put side to the 456 on the put side.
And I did get filled.
I'm going to go ahead and enter this. There we go. In at 391.
Yep.
And I've messed up my zones here. It's red, more, HSV.
We did get a crossover on our 15-minute chart also going down.
Okay. Let's see, 391 up to 404, 6.
$391 to 406.
Nice.
I'm up.
Nice, Ashim. And we're going to turn this minor zone, turn this into a minor zone. And by turning it gray, let's turn the price level to gray. And that's a minor zone now. Hmm. Back up to the demand zone.
Like I said, just quick moves today.
Yeah, it's a bit of a schizophrenic market today.
Tim, you mentioned that so then we'll have a live session, you know, somewhere in October, November,
Oh, we're going to do that in January.
January. Okay,
Yeah.
okay, good. Thanks.
Everyone, take a look at your calendars. Look at the third week of January. We're going to do a live event, location to be determined. It'll be somewhere in the South, maybe here again. We're definitely not going to New York or Chicago in January.
I mean, we can go to Florida, but not in New York or
Oh,
Chicago.
there you go.
I just moved the demand zone down.
Okay.
I thought we were going to go skiing.
That's right. We've talked about that too.
On skiing, though, we'd have to time our trading, so we were doing calls when we're riding the ski lift up and puts when we're coming down the mountain.
Mm-hmm.
Well, if we went to Tahoe, it's 3 hours earlier, so it'd be 6:30 and we'd be on the slopes by 9:30.
True.
Oh, okay.
True enough. Love Tahoe. That's where I learned to ski.
Never been there.
Ah, beautiful, beautiful place. Let me turn this into a minor zone. There we go.
Then in the evening, we can drive on over to Nevada, right across the street,
Huh?
and lose all our all of our wins.
There you go.
Well, we got the Dow's down 254, NASDAQ's up 31, S&P's down 3 3/4,
Mm.
and 6.9 million underlying have traded.
Boy, that's thin, very thin.
Yeah.
All right, we got price moving back down again. Went up, took out some stops. Market makers pushing back down. Our 15 and 30-minute bias is toward the put side now for sure. And our 15-minute about to cross on the MACD. So showing longer term pressure for price to go down. Still in this put trade.
Tim, do you still have that call trade too?
I do. I do.
Tim, call trade. I was first. I was in. I was filled in 379, and then I took another one, 313. Then I just sold it for 352.
Okay. This is a tough market to trade today, guys, for sure.
That's true.
Yeah, we had the same thing last month between the before the CPI and the PPI numbers.
And a lot of this is just low volume. Very, very hard for the market maker to get good trends going when there's this type of low volume.
Come on, get down here.
Well, we haven't had a loss since the 30th. Today is probably going to be that day we get a loss. But we still have plenty of market to go. Came all the way back up to VWAP, punched through VWAP here just a little bit. and trying to come back down. Let's see what our markets are looking like right now. And Dow is down 242. NAS is up 50. S&P is flat. Price heading north. Breaking through the minor zone pretty easily. The market maker trying to extend this push. It's getting some help from retail traders. You can see comparatively, we've got volume rising. And price pushing through VWAP again on its way down. At least the market is showing that, or QQ is showing that it can move. All right, so we're an hour and 2 minutes in. We have 7,600,000 in on the underlying. And Dow is down by 232, Nas up by 52, S&P's up by 1 point. Let's see, we got some questions. Gary asked, if it's not the market makers, when might it be the civilians? Well, the market maker or market makers are always controlling price. Retail traders, I mean, it would have to be a ton of them being able to push price up. But in a way, they do price, because as long as the market maker is getting support by retail traders in a direction, then the market maker will continue to push that direction until he runs out of retail traders. So in a lot of ways, retail traders, influence those trends quite a bit. And he asks, when you see that kind of volume, is it a safe assumption that it's always a market maker? It's a combination of both. When I see a sudden jump in volume compared to what's around it, I believe that is the market maker making a move, starting a campaign, or trying to start a campaign. Generally, the market maker will start a move or start a campaign, and then retail traders will jump into it. And if it goes long enough, FOMO will start to take place, fear of missing out will start to take place, and that move will become greater and greater. Colling's book mentions volume at price. Do we see this phenomenon anywhere? I don't. Yes, we do, but I don't have a chart set up quite that way to see volume at price. You can actually, if you come over to the active trader, you see the volume, the blue bars on the volume. Let me get my drawing tool out. These are great questions. I love this. All right. You see over here the volume that's going on, and you can see volume at price because it's showing you how much volume at each individual price level is happening. So at the 335, we've got a high volume. That's volume at price. Got a doji here in the last minute. Usually means we're going to get a reversal. You can see how much price went up and then came right back down. So don't be surprised to see price go down.
That would just break my heart.
Yeah. Gary asked, you mentioned market makers have something called a level 3. Is that their version of volume at price? Well, their volume 3, they can see everything that's going on. They see order flow. They see where stops are. They see every order at what price is coming in. So I guess in a way it's similar in that respect. See, basically their level 3 allows them to see everything we're doing, but we cannot see everything they're doing. We make some assumptions, some educated guesses on what they're doing. How do civilians get a level 3? They pony up a couple of $1 million.
Probably a couple $1 million a month.
Yeah.
But it's interesting, most of the brokerage houses make their money on market making, not people's clients selling and buying.
That's right. That's absolutely right. You know, brokerage houses, the big brokerage house, well, I guess all brokerage houses, whatever they are, have two sides to them. They have a market making side and they have a retail side. You know, the retail side is your 401ks, your investments, if you're using them to place stocks, Lord knows why you'd use a broker to do that anymore. I don't know, but you have that side of it, and all that money they collect goes into the market making side so that they can control markets. And their primary job is to keep the market moving. So they are obligated to buy up, you know, odd lots, just keep it moving. You know, if there's no other buyers, they may come in and buy unbought options. But for that obligation, because they have such huge reserves, they can move the market at will. Well, just slow today, guys. Just very, very slow today. Let's see. CPI should shake some things up tomorrow, and then the PPI, which are two of the biggest reports that we get other than the Fed announcement on interest rates. And that's next week, Keith, Fed?
Yes,
Okay.
next Wednesday at 2:00 with the press conference to follow at 2:30.
Yeah. And so next Wednesday, we will be back in the afternoon at 2:00. Our usual Wednesday is, we usually come back at 3, but we will come back at 2 for the Fed announcement. And even though we're expecting a rate drop, you know, when it actually does happen, I think we're going to see some massive movements in the market.
Yeah, particularly for the press conference, they're looking to get their thoughts on the next one going on, not the one that just happened. All right, come on, get down here now. You've had enough playing games up there. Time to land this plane.
And you heard Gary mention the book by Ann Calling. It's called Volume Price Analysis, VPA, which is a great book for options traders. In fact, I recommend it, of course, in the welcome email, and gives you a great understanding of market making and what market makers do. someday, hopefully sooner than later, we'll get a market maker in to talk to us. Of course, probably the only thing that'd be allowed to talk about is their children. Sorry for how slow the market is going today, folks. Not a lot of trades today. I'm going to move this demand zone down just a little bit.
Oh, yeah, sure enough. Give it some encouragement to get down there.
Oops. Let's see, we got in at 10:14. Yeah.
There we go. There we go.
Okay.
Come on. There we go. Keep it moving.
I was just asked if I'm going to leave the charts up after. I'll leave them up for about 15 minutes, guys. I've got coaching after that I've got to get onto, and we'll need the charts then. Oh, a doji. Doesn't seem to be affecting it. All right. Not far away now.
No. Yeah, come on. Get through
Well,
there.
at least it wasn't a second ago.
There we go. Come on, get through there. There we go. Come on, get through there. Come on. Come on, get down through there. Just ignore that doji. Get back down through there.
That's not the right direction, Keith.
No, it isn't. It's vertically challenged here.
Yeah. But again, see how price comes right down to the zone and bounces off of it, comes in, retests the zone.
That's the first test of that since we moved it down.
Randy asked, you said different market maker. What tells you that? Just looking at price movement, how we're getting these quick little sell-offs or push-ups. We have a favorite market maker who does these nice long trends, and they look like ocean waves. But haven't seen that market maker here for a couple of weeks. I mean, the candles and the wicks tell you a lot about what retail traders are doing and what market makers are doing. And you combine that with volume and you get a pretty good, complete picture of what the will of the retail traders are. Because
All right,
remember,
down this time.
what makes price move? Simply stated, it's the will of the traders. As long as they're willing to keep buying and buying and buying, price will go down. I mean, price will go up. If they're content on selling and selling and selling, price will go down. Come on, just need a little more here. There we go.
All right.
And getting out. All right, out at 409, 391 to 409, finally.
My one account, it was 518 to 540 for
Nice.
22 cents. And the other one is 528 to 543, so 15 cents.
Nice.
Nice. And I got 18 cents out of that. Let me see, so it's 30, 40. So I'm up 40 cents on closed trades.
And I'm up 59 cents on 2 trades.
Nice.
So I actually have more than that, trading both accounts, but I'm only reporting one account.
Yeah.
Well, that was a fun ride, huh, Tim?
That was a fun ride. Now, price can rise as far as I'm concerned.
Absolutely. Tim, you got my August report, right?
I did, thank you. And as it turned out, I forgot you had sent all 3 reports. in an
Well,
early.
the August one I'd sent before there was still a few days left in the market trading. So the one I sent this week included all the trades.
Okay, it's looking good.
Yeah.
It's looking real good.
I did have one test trade here last week that I kept going. It was a call that I kept over the weekend, kept through to today, and closed the rest out today. But that was a sort of a test
Yeah,
thing that I was trying. But all the trades that we've done in the morning and everything for what I'm currently trading now, except for that one test trade, I haven't had a single loss on that, and so that's been great.
yeah, yeah. No kidding.
All right, Tim, I think I'm gonna step away here. I'm not gonna do any more trades, at least here this morning.
Okay.
Remember that there's a bond auction at 1 o'clock today, so that could move things a little bit, but it's still, I would expect it to be fairly slow today going into the CPI and the PPI tomorrow and Thursday.
Okay, sir. So let's see. Our bias is toward the put side. I'm going to check the 15 and 30 here. Yeah, definitely toward the put side. I guess that's obvious. Gary says if you can video the market makers speaking, we could probably ascertain their wink and nod inflections. Yeah, no kidding. Well, so much of what they do is controlled by massive computer systems. All right, price is going through a rising cycle now.
So Tim, I'm still holding that 457 call. What is your plan with that? Just to hold it till tomorrow, or?
I'm going to see where it is when we end. I probably won't hold it much past 11:30. We're in a rising cycle now. I want to see if we can get as much back as possible. I don't want to hold it overnight. in the market, or QQQ has shown us that price can get up there. It has done it before twice. Maybe it can hit it again in this push up that we're having right now. Okay, guys, we've got the top of the hour. We're going to go ahead and wrap it up for this morning. So 2 positive trades and still have that call trade out. I am going to hold on to it a bit longer. As long as price is rising. All right, guys, that's it. I will leave charts up for about 15 minutes and then we'll need to take them down. Price is on a nice upswing here, so see if we can take a little more off of this call. Okay, guys, that's it for me. I will talk to y'all tomorrow. Have a great afternoon. Bye for now.
Hello, Tim?
Hey, anyone that's still here? I'm thinking about, I'm a newbie here. I'm thinking about closing that 457 and take a loss here. What do you guys think?